Hi everyone, it's always nice to meet you in a new episode of our gold price weekly forecast. Gold today, we'll start with the numbers. On the last trading session of Friday, gold spot printed a closing price little above $1,807 per ounce. Numbers rounded down, the market is closed. And on the last week, gold traded as low as $1,785 per ounce and as high as $1,814 per ounce. Numbers are rounded and the market is closed. Gold is trading above its all daily simple moving averages except the 20 days daily simple moving average, and technically it's a neutral to bearish. For the RSI readings, it's bearish on the daily chart and moderate on the weekly and the monthly chart. For the support levels are seen at 1785, if broken then 1780, this is highly important, then 1759. For the resistance levels, it's 1808 and 1815, and finally 1828 as the level of the breakdown. The pivots are located at 1802, 1804. Those will work as a support for buying. That's all. Move on now to the economic calendar. On the economic calendar for the coming week from the United States, the markets are waiting for the following economic headers to be released: the trade balance, imports, exports to be released on Tuesday, then core CPI initial jobless claims on Thursday, and the Michigan consumer sentiment and expectations on Friday. That's all. Move on now to the trading strategy. Hi again. If you are new for this video, let me just guide you how this section of the video works. We are going to start with a quick recap of our last video, then we will have a look at the US dollar chart and the gold chart. After that, we will arrive at a conclusion on how to trade this market for the coming week. Starting with a quick recap on our last video, we have been actually anticipating and waiting for a decisive break of the major support line located at 1780. Unfortunately, this did not happen. We're expecting gold market to go down all the way up to 1700, maybe 60 or 1720, but we did not get that move yet. Starting with the US dollar chart, on the last week, the US dollar suffered major losses because of the announcement of the rate hike by the central bank of England. However, gold could not capitalize on this huge losses for the US dollar index. Gold is priced against the US dollar index, should benefit from any decline in the US dollar index, but unfortunately we did not see gold taking advantage of this decline, which is very bearish for gold if you will just analyze it in a rational way, because gold should shine when the US dollar index is having what they call it, some sort of a decline. Look at the other sides of the market, like cryptocurrencies, for example. They move to the upside, the euro moved to the upside, the pound moved to the upside, except for gold and silver. Unfortunately, they both sold off. For the gold chart, the gold chart is actually, gold is in a consolidation between 1780 and 1850. If you look at the big picture, it's actually between 1700 and 1850. But now we have some sort of support at 1780. We have an inside candle on the day, on the weekly chart, and we have an inside candle on the monthly chart. And I don't know what this market is doing at the moment. Actually, it's just like wasting time, it seems. And I do expect that maybe considering the situation that we have in the commodities market, I mean, like most of the commodities are into a rally due to the escalation and the situation between Russia and Ukraine. We may see an up move in gold up to 1800, maybe 28, 1830. I think this is max to max. Then gold has to take to switch side and come back down all the way to 1760 or 1720. For me, I'm still bearish on gold. I'm looking for a decisive break below 1780, even by half a dollar. If that happened, I'm going to take a sell position with a target of 1700. That's all for our video for this week. Thank you guys for watching. Please share, like, and subscribe, and I will hopefully see you in the coming week in a new video.